All right, we're going to talk a little bit about the beginning of Chapter 2. We aren't actually covering all of Chapter 2 until after we cover Chapter 6, but there are a few things we need to know before we can actually start doing some sample problems. We need to know what's taxable and what's not taxable income. So I'm looking at the beginning of Chapter 2, and the definition of gross income is income from whatever source derived. That comes right from the Internal Revenue Code, and so any income basically is taxable. And so we've got some inclusions and exclusions from gross income. So we're going to look at page 3. There's a table for inclusions. It's just a partial list, and a table for exclusions. And I just want to point out, I want you to read the whole thing, highlight things that you think are interesting, and I'm going to point out a few that I think are interesting, things that maybe you didn't know. The first one, embezzled funds. I think that's hilarious. You guys all know that I love fraud. It's my favorite, one of my favorite classes, and so all of those people who steal all that money, it becomes taxable. If they don't pay it back, it's taxable income that they never claimed. So the IRS often goes after them as well. Gains from illegal activities. That one's really interesting too. So that's how they caught Al Capone. If you guys didn't realize that, anybody who took the fraud class probably already knows that. But Al Capone was not convicted of all of the mass killings that he did during his reign. He was convicted of tax evasion because they found records of him earning income. I thought that was really interesting too. The next one on the next page, gambling winnings are taxable. That's very interesting. So if you win the lottery, then you will probably have to claim that as income. And we'll talk a little bit about that later on. Well, no, actually, I can mention that now. If you go to the store to buy your lottery ticket and you win under $600, then they're just going to give you the cash, and they're not going to take your Social Security number. In which case, most people don't claim that because even though it is taxable, by law it's taxable, but a lot of people don't claim that because there's really no record of it. If you win more than that, then you have to go to the lottery office. You have to give them your Social Security number. That's going to be reported to the IRS, and you definitely have to claim that as well. And if you don't, the IRS knows about it. So that one's a little trickier. Group term life insurance premiums paid by your employer for coverage over $50,000. Okay, so that means that basically down in the exclusions table, it talks about group term life insurance of not over $50,000. So if you have group term life insurance through your employer of $50,000 or less, that is not taxable to you. If they have a policy on you that's over $50,000, then what's taxable to you is the premiums paid on the coverage over $50,000. I know that sounds a little bit confusing. Most companies don't even do that anymore because it was so confusing to everybody. Another one, prizes are taxable. You win a prize on the radio station, that they're probably going to hand you a 1099 right along with your prize. And then punitive damages, I thought that was interesting too. So pain and suffering, if you have a lawsuit and you sue for pain and suffering, that's going to be taxable because those are punitive damages. Some things that are not included, which means they're excluded from your gross income, gifts. So a gift that you receive is not going to be taxable to you. Let's see here. Inheritances, life insurance. In fact, any insurance proceeds that you receive are not going to be taxable. That includes workers' comp because that's an insurance. Your health insurance company pays a bill for you, not taxable to you. So your great-great uncle dies and leaves you $1 million life insurance policy, you're $1 million richer, not taxable. Now the estate probably had to pay taxes, but that's a little bit different idea. Military allowances, including GI Bill benefits, not taxable. Ministers' dwellings, their rental allowance that they might receive, not taxable. Any military allowances. So when I say military allowance, quite often we all know, I think, that the military is grossly underpaid, most of them, and they receive money for maybe their apartment or whatever they happen to rent. That's not taxable money to them, which is great. Veterans benefits not taxable. Welfare payments not taxable. So that's our partial list on page 3. Interest and dividends, that is listed on page 4. Always taxable, no matter how much you received. Now, if they didn't send you a 1099 because it was so little, like you earned 3 cents, chances are that's not going to be taxable to you if you didn't receive a 1099 for it. But it mentions here on page 4, we're going to use something called a Schedule B, and I'm going to talk about some of these schedules in the next video having to do with the sample problem. And if you receive interest or dividends of $1,500 or more, you are required to file a Schedule B. Now, if it's less than that, you're not required to file a Schedule B, but it's still going to be taxable income. I want you to remember that. A lot of students forget that. U.S. savings bonds, we'll talk about that. I guess I could talk about that really quick right now as well. Most of your U.S. savings bond money is going to be taxable. What's not taxable is these special savings bonds that, unless you bought them and you're aware that you have these, they were offered to military at deep discounts a long time ago. If you have these, then you know you have them. If you're not sure, then you don't have them. And those are the only ones that I know of that are not taxable. Most of the time, though, U.S. savings bond interest is taxable. It's taxable the year that you cash in the U.S. savings bond. So they are going to continue earning income for a long time, and then when you cash them in, the interest that you received on that is going to be taxable. The last thing I think that I wanted to, is alimony, but I don't normally talk about that in this video. So just the first 2 sections of chapter 2 is actually what I wanted to talk about today. So that's it.